That is a very important.
Where are the technologists located? If you don't have them, I presume you don't. Is it?
We have what I would say it's a combination of economists and technologists. It's a question of, here's what the technology is, and does it make economic sense? We have those people in our economics division, DERA, and we also have some of them in enforcement, and they work together.
But you need more. Yeah, I'll take that as a yes. Mr. Giancarlo, same question. Do you have the technologists that you're working together?
Thank you, Senator Reid. We've done a couple of things in 2017 to, as Senator Brown said, to get ahead of the curve. We hired the agency's first ever Chief Innovation Officer, someone who comes with a deep background in a lot of these new financial technology innovations. We also created something called earlier.CFTC, which is our innovation hub. And you asked, where's it located? It's actually located in New York City because so much of this innovation is taking place there, and we wanted to be close to these innovators to learn from them. But in terms of protecting consumers, we also formed a virtual currency enforcement task force. It was actually that task force that recently brought 3 civil actions against Bitcoin fraudsters. And as I said in my testimony, there's more to come. And as to the resource questions, we do need more resource. I used our bypass authority last year to put forward a budget request of 13% over our budget. We had been flat funded for 3 years, and we do need additional resources, and built in those resources are additional resources for fintech generally and cyber and cryptocurrencies specifically.
Let me just elaborate a bit. We continue to refer to Bitcoin. That is just one cryptocurrency. They seem to me and proliferating. That every day there's a new variety of cryptocurrencies. Some of them out and out fraudulent, some of them based on the same Bitcoin technology or processes. But just the sheer expansion of these cryptocurrencies is an issue, one. And then two, because my time is short, and I have one other slightly unrelated question to Chairman Clayton, is are you tracking all these different daily emerging currencies, one? And two is, again, it goes back to my sort of step back question, is someone looking long term at the systemic effects? Where are we going to be? This is eerily reminiscent of the late 90s in derivatives, which were nominally small parts of the market that were esoteric, et cetera. And then, of course, 10 years later, exploded. So why don't you start with Mr. Giancarlo and the chairman, and I'll finish up with the chairman.
Thank you very much. So you're absolutely right. Bitcoin is one of many. However, of the many, there's really a handful that have gotten significant traction, and so that's important though for listeners to know, because so many of these are fraudulent, as you said. We went after one, and just mentioned it because I think it's interesting, called My Big Coin, which became known as My Big Con, by people that were defrauded by it. It was people that really were taking, it was a Ponzi scheme. They were taking consumers' money and using it to buy houses and furniture and jewelry. And we went after them hard, and we will continue to do that. In terms of systemic risk, right now this is still a relatively small market just by ratio. But as you say, we have to watch it and watch it carefully.
Mr. Chairman.
Yeah. So, as I mentioned, the SEC doesn't have direct jurisdiction over the pure cryptocurrencies, but we have had to watch it because, of course, they're integrated with the markets that we do oversee. And to your question of does 10 make sense or 15 or 20 make sense, I have a hard time getting my head around that, because if it's an efficient medium of exchange, 15 of them fluctuating different places probably doesn't make a lot of sense to me. But that's where I'm at. On systemic, look, I agree with Chairman Giancarlo. But if people are getting ripped off, that presents reputational risks that can have systemic effects.
We can go into a raft of questions: money laundering, evading, et cetera. But just changing gears 1 second, and I'll make a comment and then follow up with a written question. There is some consideration I have heard of the SEC allowing in public offering, initial public offerings, bars to suit, i.e. forced arbitration. I think that would be a very bad idea. And I'll make the argument and write to
I'm
you.
happy to address the question if you.
Well, we're out of time on that right now, so we'll have to do it.
Right. You can, we'll talk.
Senator Rounds.
Thank you, Mr. Chairman. Gentlemen, I'm just curious. I go back to where I learned with a pen and pencil to begin with as well. And we did not have a quill at that time, but we did have number 2 lead. And as I get into this and learn more about this thing, it's fascinating to see how quickly things are moving. And yet everything that we talk about seems to translate back into dollars and cents yet. That has not changed until now. And suddenly we're talking about a new type of exchange, and it sounds almost like bartering to me. And it's a bartering which could avoid the determination of a value in dollars and cents, which brings up the question of how do you tax it if you need to? How do you recognize income? But also, in this particular case, I noticed both of you identified that you have additional, or you have existing resources and regulatory oversight capabilities that you are utilizing today. And while I question whether or not there are seams that have to be filled, it would appear that some basics that maybe a lot of us don't quite understand still have to be answered. And I just want to just start out because I think, Mr. Clayton, you started with this discussion with regard to the issue of whether or not you had control over an ICO, and the fact that if they were issuing, in this particular case, Bitcoin or the opportunity to market it, you had identified it as a stock or at least a value of something. What is, in this particular case, that thread that you utilize once again? And can you delve into that a little bit more about how your agency responds to the regulatory need in this particular case? What is the specific item that you look at as being an item which is subject to your review? A security in what?
The definition of a security is broad, and it includes. I'm gonna not use the technical terms. There's Supreme Court cases and things like that, but it includes if you're offering me a security or offering me something, a coin, and I give you money, and the purpose of me giving you that money is to profit from your efforts going forward. So if I give you money, you give me a coin, and you say I'm gonna take the money and I'm gonna grow a business, and that's gonna increase the value of that coin. And by the way, Chairman Clayton, you can trade it to somebody else. So you may be able to get value for it tomorrow. In fact, you probably will get value for it tomorrow. Buy now so you can get more value for it in a few days. That's a security.
So commodity-wise, if we're looking at trading commodities, you would not have an interest in the subject of investigating or reviewing whether or not the trading of an ag commodity was something. And yet, when we talk about the CFTC, we're talking about a different story where commodities most certainly are an item of interest to you. Is Bitcoin, or are these as currently being traded, are they a commodity, or are they a security, or are they both?
What's so challenging about Bitcoin is it has characteristics of multiple different things. One of the phrases that's often used is that Bitcoin is a medium of exchange, a store of value, or a means of account. Well, those three things have different connotations to them. If it's a medium of exchange, then it's like a currency-like instrument. And yet, as we've seen, a number of means of exchanges have been closed to Bitcoin. There was recently a Bitcoin conference that stopped accepting Bitcoin from registrants because they couldn't process the payments. So, but yet it's still spoken of as perhaps a means of account. And in that case, it has implications from the Fed and currency. From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go onto the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks my 30-year-old niece who bought Bitcoin years ago, and she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it. And she's not a fraudster or a manipulator. She's just a kid and believes in it. And, you know, I was fascinated talking to her. And I think she represents a lot of folks that think there's something in this, I want to hold on to it. And so in that regard, from our point of view, it's a commodity. And if there's a derivative on that, we regulate it. The problem is in the cash market, we don't have regulatory authority, means we can't set the standards. But what we will do, and we are doing, is looking for fraud and manipulation. And we intend to be very aggressive, if nothing else, so that people like my niece can have some security that there's not fraudsters and manipulators out there. And there are far too many of them.
Thank you, Mr. Chairman.